Hello guys, welcome to another video. We haven't looked at this one in a while, so if you're new here, make sure that you subscribe. And if you're interested in learning this style of trading, you can hit me up, then maybe we can get you into the mentorship for March. All right, let's get started. So we're going to look at VIX75. I'm just going to show you a strategy or a way in which it's like the simplest way to analyze these things. It doesn't matter if you just get this strategy, you can apply it on whatever that you like. Here I always look at Nasdaq, VIX75, sometimes gold. So if you master the strategy, you can go apply it anywhere. So let's get started. All right, so we're going to do the same thing. If you've been on this channel for some time, you know how we do things here. So we're going to start with the highest time frame, and then we work our way down, because if I'm trading, just because I'm looking at monthly does not mean I'm planning on executing a trade on monthly. No, I just need to look at the bigger picture, and then before I can look at the zoom in, I need to understand where is this market going on a longer run. Then I can then shift to the smaller time frame. So this is what we have on monthly, and even in the previous videos that we made on this one, the structure still looks the same. We are still very much bearish. Bearish trend line there, and we are inside. We've hit the support. This support, we hit it from last month. If you remember, there's a candlestick here that says we hit the support here, and then we tried to go up. The bulls became aggressive, right? But their anger, or that aggressiveness that they're trying to show, didn't do anything. Basically you're trying to say you are aggressive, but you don't even move past a resistance, or you don't even move past a bearish trend line. So you were trying something, but it's not something that we can say you have achieved. You didn't achieve anything. So basically on monthly, the price is still bearish, and we are at the support. Yes, you can get your buy trades, but don't be someone that's going to take a buy trade and say I'll place my TP there, because of what you'll be saying the price is going to break the bearish trend line, the price is going to break the resistance, and no one knows. You can't trade like that. Well, now you just need to trade until the key structures are hit, then you take your profit. Because once you want to look past that, that's where the price will return, or it will reverse, and it's not going to be nice. So this is all that we have on monthly. Let's check what we got on weekly, right? So on weekly, we basically have the same strategy, or the same structure that we got on monthly. So you can take this as your support, this one here, and say the price is there by the weekly support. We have touched it before, but when you look at it, the same thing that I said on the monthly, I said that the bulls, yes, they touch their support. After touching the support, after the price touched the support, the bulls tried to defend that support. They formed what you call a bullish rejection candlestick, which basically means the bulls are becoming aggressive, right? Okay, while we're saying the bulls are aggressive, and they break the range of that, and then they pushed up. But them pushing up, they only went, even though even the trend line, I don't think they touched it. That's why I'm saying, yes, they were saying they are aggressive, but they did not really achieve anything, because this is the trend line that we have on this time frame, right? And they just went until around the trend line. They did not even break that trend line. They did not even break any resistance. So they were just there giving us a pullback. Now the price is back, right? So you see, we are back at the same zone that we touched before, and we reacted. So now we are back at the same level. That level is no longer fresh, and it didn't do much. It just gave us a pullback. The price can still continue, just like it did here. When this price moved up here, when it moved from here to there, it didn't break the resistance, and the trend line at the time was here. It did not break the trend line. So basically it was just a pullback, and then the bears continued. I'm not saying here we're going to create a new low, but I'm saying yes, we're at the support, but the bulls, really, there's nothing that's saying that the bulls are trying something, at least on these bigger time frames. There's really nothing. Yes, they can touch that support, that's not fresh, and go back again, but really there's nothing. You need to get confirmation. Yes, we understand we are at the areas of support, but when you're getting a buy trade, because these areas of support are not fresh, when you're getting those buy trades, you need to make sure that you get confirmation for that. So basically, to conclude on what we're having on weekly, we are at the support, but we are still bearish. So meaning if I'm getting a buy trade, I need to understand the reason why I'm getting a buy trade is because we are at the higher time frame areas of support. But because the trend is still going to the downside and these zones are not fresh, I need to get confirmation for those buy trades. Now let's move on to daily. Let's see what we got here. So you see why I'm saying it's very important for you to know or to follow the structure all the way from the highest time frame and say on the highest time frame, this is what I have. Now let me go all the way down and get until I get to the time frame where I'm going to execute, and then now I compare the two and say this is what I got that side and this is what I'm having here. Then what do I do? Because now if I just started on that H1 or M15 and say this is the structure here and already planning trades there, it's going to be difficult for me to have that the perspective to say that this is where the market is most likely to go. But if I check the bigger picture first, I will have an idea. So all right, let's continue. So if you like this style of trading, if you like what I've been teaching on this channel and you haven't subscribed, please do so. All right, so this is what we have on our daily chart, right? The price was very much moving to the downside, and then we saw that it was becoming weak because of what it was moving strongly like this. All of a sudden it's starting to do something like this. You see, it's no longer going with the same pace like it was before, right? This is where it was doing all of that, and during that time you could put a bearish trend line here on daily, right? And this became your support. We are inside it. This is the support that pushed the price up. I mean, when I say it pushed the price up, I mean from where the support was formed, it pushed the price up and it broke the trend line and it broke the areas of resistance that were formed on our way down. It broke all of that. So basically this support that we're in right now, this one here, it's a very strong support that the price is touching it. You were allowed to search for buy trades there and say that I do understand that the thing here, the trend on this time frame is not really bullish, but my reasons for looking for buy trades here is that this zone, it's there inside the weekly one, is there inside the monthly one, and it has achieved something. What is it? It actually pushed the price up, changing the trend from bearish to bullish when it was formed, right? And it is still fresh because of what? It was never tested. This zone here is never tested. We are testing it for the first time. So because of that, you would say it's not a bad idea for me to search for buy trades here, right? And when you do that, because the trend is not really still bullish, because remember it pushed up, we became bullish, and we could put a bullish trend line here. The bulls, they failed to defend their trend line. Look at this. They are trying, instead of pushing the price up, they allow the best to keep them here. They are not strong, and then they ended up being defeated because of what they should have protected or defended this trend line. They should have done it, the trend line here, because this was their key structure to say that let's defend this, push the price back up, but they failed. Their best won. So because of that, yes, we understand we're inside the support, but the trend is no longer bullish and the zone on the bigger time frames are no longer fresh. So because of that, you were allowed to look for buy trades here with confirmation. So if you're someone that's executing on daily, you will say the price is now inside that daily zone, the support, and the daily zone is inside the weekly one, and the weekly one is inside the monthly, and I'm looking for buy trades. And then you see the price giving you this, which is a structure that I'm always talking about on this channel, right? Which is a bullish rejection candlestick. So that's a sign to say that this is a buyer's zone. This is their zone. They are trying to defend it. That's why they are showing this rejection. That's why the bulls are rejecting the price there. Then when you're getting that, that could have been your confirmation to say that, okay, maybe they are trying to reject, let me take a buy here, right? And even when you are taking a buy, remember, you are buying using the structure here on daily, right? And we said daily is still to the downside. That's why we are taking those buy trades with what? With confirmation. So because of that, you will say that because daily is still to the downside, and it has let's just draw it so that you can see what I'm talking about. I hope so far you are following. It had a bearish trend line here. Oh, this is the bearish trend line, right? We are still bearish. I'm taking a buy inside there. I need to understand that I'm buying on daily structure, based on the daily structure. So I need to make sure that even when I'm setting my take profit, it needs to be on the daily structure. We already agreed that daily is bearish. So when you're taking that buy, it means when you're hitting those bearish structures, you need to exit. Bearish trend line, we're still bearish. Why are you acting like you don't see that the price is hitting a bearish structure and the trend is still bearish? So when the price gets there, you need to go out, which is the trend line, either at the trend line or at the resistance, one of the two. Because of what? We're saying this is still bearish and it can still reject the price and cause it to go all the way to the downside. So because of that, you cannot take a buy. Yes, we took it with confirmation, but we cannot look past these two structures, these ones, because they are still holding. They had never been broken. So why are you acting like you don't see that they are there? Right? So you took that buy, you've hit your resistance or your trend line, you are out. Should the price then move outside like this, then you can say, oh, okay, we see you pushed up, you reversed that trend that the bears had on this time frame. Should you pull back, I'm going to buy here, which is going to be the same structure as to what we had this side, because we said the price was bearish. We had this here. I hope you still remember. I just explained it now. We said we were bearish. We had this here and the price moved up. So we're saying, should you come back here, I'm going to look for buy trades there. So it's the same thing. Should the price then do something like this, you're going to have the same zone. When the price comes back, you're going to plan your trades around that. So for now, on daily is still very much bearish. It is reacting or touching a bearish trend line. And we do understand that we're inside the biggest support on monthly, on weeklies, but it does not mean that the price should then just shoot up like that. The price can still play around and move up like this, because you know that the price does not move in a straight line, right? So now that we're seeing here the price is touching a trend line, let's move to H4 and see if we can't get anything on that side. All right, so this is what we are having on H4. And remember, when you're moving from one time frame to the next one, you need to keep that picture with you to say that on the previous time frame, this is what I got. And now let's see, let's just adjust this daily trend line. There is the daily trend line, which was never broken. The price tried to challenge it here, the bulls tried to challenge it there, but it's just too much for them. Like, it's just too much because of what they, you know, they try to push beyond that. But look what the price is doing. It's giving you those bearish rejections. So that's where the bears are saying, no, we're not gonna let you pass this structure easily. So if you want to pass here, you're gonna have to work very hard, because we are bearish and this is the structure that is keeping us bearish. So because if you break it, you will then change the structure from being bearish. So because of that, we're not gonna let you pass here. That's why it's very important that when you're holding your buy trade, it does not matter whether you're trading Nasdaq that can go up for a very long time. It does not matter. If you know that the price is now touching a resistance, and that resistance, when you analyze it, it's strong or is touching a bearish trend line, you need to go out, because otherwise you'll end up with the price just melting and you'll be like, what's happening? I thought we were going all the way up. No, yes, we were going up, but we have arrived where we were going. Nothing is going to go up forever. At some point, there will be signs that, no, here we can go for a pullback or a complete trend reversal. So because of that, it's very important for you to know how to identify these structures, which is what I outline nicely in my course. So if you are interested, you can join for the March group. All right, but for now, let's continue with the setup. So we are here on our H4, and we still need to check where the H4 is going, right? So the H4, you could have placed your trend line there and said the H4 was bearish, but all of that changed because the price moved up. Okay, let's put a proper trend line. I want to see what really happened here. Because remember, each time frame is going to have its own structures, it's going to have its own trend lines, it's going to have its own trends. So you mustn't confuse the two to say that what you did on daily covers everything for H4. No, you still need to go to H4 and check what's happening on H4. All right, so this guy here is the one that pushed the price up and then pushed it to the other side of the H4 trend line, but the price failed to move above this, which is what? A resistance, right? And when you go to the resistance and you start getting structures like this, which is a bearish rejection candlesticks, and then it ended up being pushed to the downside. Now this became your zone to say that this guy here, is the one that pushed the price up, breaking the trend line. Now it becomes a zone that pushed us into consolidation. Now the price came back to that. You can see it struggled to pass, giving you all those bullish pin bars. Eventually it took off, breaking the zone. And now we are at the second one, which is right at the daily trend line. So this is the one where you said we've got the H4 resistance here, and it is around that daily bearish trend line that we said the price is going to struggle to pass simply because daily is still bearish. Right? And look what the price did when it got there. It touched it. If you're holding your buy trades, you need to have limits. You need to say, I'm not just entering for the sake of entering. I'm entering because I think the price has got a chance of moving from this structure to that one. Once you have arrived there, you've reached that structure, you need to go out, because the price now will start to move in the opposite direction, and you're like, but why is it doing this? But you forget that you have identified that as a very sensitive area. That's why you should exit there. Now the price is reacting there. My question to you is, because H4 is bullish, right? Let's remove the bearish trend line and just add a bullish one. I want us to have this short discussion here. I want us to agree on something, right? We are saying it is bullish because it broke that bearish trend line and it broke the areas of resistance. Now we've got a bullish trend line there, and we have got a support here. This is the support. Now my question to you is, if the price comes here, what's your plan? All right? So I would say to you, because remember, we all know that the price is at that daily support, weekly support, monthly support, which means at any time it can go for a very long-term bullish trend, but it hasn't yet given us a reason to say that that thing is gonna happen now. No. So but now you need to say, because our daily is still bearish, and daily is the price is coming back from the daily structure. If I'm thinking of buying here on H4 structure to take the price up, I need to be careful, because of what? It's like I'm fighting against that daily bearish trend line, and the daily is still bearish. So yes, we do understand that this is a very nice zone, but because of all those factors, it might end up failing. You see? Yes, if you're someone that has got a nice fat account, or even if it's not fat, but you are willing to risk a smaller amount from that, you can look for like confirmation. You need confirmation here, then you can take that buy. Even if you're taking that as your buy, you need to keep in mind this guy is it's not broken, it's still active. So even if you're taking that, you still need to be mindful when the price is getting back to that. Unless if it plays outside like this before coming back, then you'll say you don't worry much about this one because it does not exist anymore, it has been broken. Then when you're taking your buy, you can have your take profits slightly up there. But until it has been removed, you cannot ignore it. And remember, I'm saying that yes, this zone looks so nice, but because of the structure, the fact that we are coming from a daily bearish trend line, and daily still bearish, we can end up taking out what we are having here on H4, can end up continuing like that. That's what I mean. So you need to be very, very careful here at this support. Like you need to have like confirmation on top of confirmation. Otherwise, don't even bother there. But for now, if let's say you get a reason to sell, you can do that until here, because you'll be saying, yes, we are at the H4 resistance. I understand H4 is bullish, but we have hit a higher time frame structure, which is a daily resistance or a daily bearish trend line. Because of that, if I'm taking a sell here on H4, I need to, because remember, I'm taking a sell on H4. I need to make sure that once the price hits H4 structure, I'm out. When the price gets here, you are out, because anything is possible there. That's why I'm saying you can even search for buy trades, but with confirmation. So that's why I'm saying, whether you are selling or buying, depending on the time frame that you are doing that on, you need to make sure that when the opposing structure on that very same time frame is hit, you go out. So let's do one more time frame, which is our H1, and see what you got here. So the H1 has already changed the structure, because of what? We can have this here and say That's our bullish trend line that has been broken. But if maybe the price was to move lower than this, right, then you can say I can take that sell targeting what? That H4 support. So without that, it's going to be very tricky for you to sell, unless if you're selling directly from that H4. But for now, what we can say is that these structures here are suggesting that the price can be rejected to at least here or even beyond that, right? But it does not mean you should just go there and sell immediately, because of what? This could end up, this is also possible that it can end up being just a pause there, and then we continue like that. So you need to make sure that before you execute, you do have your confirmation, or you do have something that says, yes, now it's safer for you to pull the trigger. Yes, it can still fail, which is why it is important for you to always have a stop loss. But what is important, or the thing that I always emphasize on in my mentorship, is that yes, we all know that trading is all about buying and selling, but it's not just, it doesn't just end there. Because if you can't read the structure like I'm doing here, you won't know whether you should be searching for buy trades or sell trades. And even when you're holding you have that trade open, you won't know where you should be exiting, because of what? It will be moving in a direction, and then you will think it's gonna go in that direction forever, and that's not gonna happen. You need to be able to identify these sensitive areas. You need to be able to tell where the market is going in terms of the trend, and then you can search for your trades targeting those key structures or those opposing structures. All right, so that's all that I had for you guys on this VIX75. Just make sure that you follow it. When you get it gives you reasons to pull the trigger, do so. And if it doesn't, don't enter. Don't force things. Don't force things. You'll catch the next one. Alright guys, if you have watched until this point and you haven't subscribed, please do so. And then otherwise, I'll see you guys in the next video. Thank you.